So another update for the S&P 500. Despite fears of trade war disruption to the global economy, our guest says he is approaching markets cautiously. We're joined by Mike Vinokur, portfolio manager at Propellus Wealth Partners at IA Private Wealth. Great to see you.
Thanks for having me.
So we're obviously not out of the woods when it comes to this trade war yet.
I don't think so. There's going to be a lot more back and forth, and what worries us a little bit is the unintended consequences of whatever the deal is going to be. We just don't know how consumers around the world are going to react to American brands, American companies. Some you can do without, but some you can't. And so at the edge and at the margin, it's going to be interesting to see how companies, when they report, Q2, Q3, Q4, and whenever this whole tariff thing is done, what their international sales look like, and do they see a permanent drop-off of business?
I mean, apparently we saw that with Tesla, partly because Elon Musk was pronouncing on European politics, and Europeans didn't appreciate that.
Right, but I'm thinking more Starbucks, Chipotle, McDonald's, Pepsi brands, all of these things that we take for granted here in North America, but, in Europe, Japan, Middle East, Asia, may not take too kindly.
You've gone to a pretty big cash weighting of about 33%.
Yeah. We think that, in Q4 of last year, we kind of thought that we were in the 8th inning of this economic cycle. We were concerned about the money printing that was going on during the COVID years and thereafter. We thought that no matter who won, and especially when the Trump win occurred, we thought, okay, there's going to be some contraction in money being spent by government. There's going to be some efficiency. And so we thought that valuations had perhaps gone a little too far. And we've been actually expecting a correction. We've had this, huge bounce, but we don't think this is over. And we think that caution will be rewarded sometime in the late spring, early summer.
I.e. stocks will be cheaper at that stage.
Correct.
Yeah, and keep some of your powder dry.
Yes.
What about Canadian stocks? We're vulnerable in any kind of trade war as well.
Sure, absolutely. I mean, again, my comment is more suited toward broad markets. There's always that business that, if it falls to a certain price, you want to grab it. There are some great businesses that obviously we still hold in our portfolios. We have a huge buy list of companies that we'd like to own. So regardless of our fear or our concern about a contraction in the economy or GDP in general, there's still some great businesses to be had. And some industries are much more resilient than others to either an economic slowdown or this tariff tantrum, whatever form or shape it will eventually take.
We're going to get some stock ideas with you shortly, but broadly, the life insurance sector attracting you right now?
Yeah, we like the life insurance business for a couple of reasons. One, they have, for the most part, very sturdy balance sheets. You've got some quite high dividend yields. They got quite hit in 2022 owing to their fixed income portfolios when interest rates went up, skyrocketed out of nowhere. That's sort of now normalizing a little bit. And life insurance businesses, we sort of like their cash flows because they're kind of steady eddy. They may drop, the growth may drop off a little bit if, employment comes down. But if you have a life insurance policy, you really don't want to stop paying those premiums. Otherwise, you lose the coverage. And for the life insurance company, if somebody lapses their policy, well, the liability goes away. Oh, yeah. So all the premiums become pure profit, right? So it's sort of a kind of business where if you own a good life co that has some asset management businesses, some retirement businesses, annuity businesses, et cetera, and it's a diversified entity, these are kinds of businesses that we like, especially some of the ones we own that are trading at huge discounts to their book value.
Who would that be, for example, Mike?
So, for example, Jackson Financial is a company that we're looking at that we previously owned.
In the U.S.?
In the U.S.
Okay.
Lincoln National is a company that we own today that we quite like and think it's got quite a bit of upside, very low downside, based on its price to book value, et cetera.
What about the Manulife or Sun Life? Are you attracted
So
to those?
we do own Manulife. Manulife, though, is a little bit more expensive than those others I just mentioned.
Sure.
An amazing operator, nothing bad to say about Manulife, great dividend yield. But the upside on Manulife is not as great in our view as some of the others I just mentioned.
Mike is very kindly sticking with us for a second block after this. We're going to get some stock ideas. And for one thing, he sees upside at Parkland amid that boardroom struggle. We'll be right back.